Hello, and welcome to this tutorial. Today, we'll walk through how to add accounts to your chart of accounts. Whether you're just starting out or already familiar with the system, this guide will help you structure your financial data with confidence. Here are the 3 key steps to follow. And note that we'll go through practical examples after explaining each step. Step 1. Adding an account to the chart of accounts. Open the Chart of Accounts tab. Locate the appropriate section based on the account type. Refer to column E to determine where it belongs: assets, liabilities, equity, revenues, expenses. Insert your account within that section, following the existing format. Once the account has been added to the chart of accounts, it will automatically become available in the Transactions tab, within the drop-down menu in column D, Account Name. Step 2. Adding the account to the correct financial statement. If the account is part of the profit and loss statement, it must be added to the P&L tab. If the account is part of the balance sheet, it must be added to the Balance Sheet tab. This ensures that your financial reports reflect the new account correctly. Step 3. Adding the formula. Once the account is placed in the correct financial statement tab, if it's a P&L account, make sure to add the appropriate formula in the P&L tab. If it's a balance sheet account, add the formula in the Balance Sheet tab. This step ensures that the account is included in the calculations and totals of your financial statements. Let's go through 2 practical examples, one for a profit and loss account and one for a balance sheet account. We'll start by adding a P&L account. Here's how to add a new expense account that will appear on the profit and loss statement. This new account will be called Other Expenses. First, assign an account number that begins with 5, like all expense accounts, and make sure it hasn't been used yet. Enter the account name in column B. Then complete columns C, D, E, and F according to the existing format, adding the account to the P&L statement. Once the expense account is created, it needs to be added to the P&L tab. Insert a new row below the last listed expense. Click Equals on your keyboard. Then go to the Chart of Accounts tab and select the name of the new account. Next, drag and drop the formula from the cell above to apply the same calculation logic. Verify that the new expense account is properly reflected in the total operating expenses calculation. If it isn't, make sure to update the formula in the total operating expenses cell to include it. Testing the setup. It's recommended to run a quick test to ensure everything works correctly and balances properly. In the Transactions tab, add a dated test transaction. Use the company's bank account and the new Other Expenses account to record an expense of $500. Always check the balance validator at the bottom. It should display $0 in green, confirming the entry is balanced. Go to the Trial Balance tab, refresh the pivot table, and return to the P&L tab to verify that the $500 expense appears correctly. You should now see the new expense reflected in the P&L statement. Now let's look at how to add a balance sheet account. For this example, we'll create a long-term asset account for a building. Step 1. Add the account to the chart of accounts. Go to the Chart of Accounts tab. Locate the section for long-term assets and insert the new account below the last listed long-term asset, which is currently on row 24. Assign an account number that begins with 1, just like all other asset accounts. Enter the account name, in this case, Building. Complete columns C, D, E, and F as needed, following the format used for other accounts. Step 2. Link the account to the balance sheet. Next, we'll make sure this new account appears on the balance sheet. Go to the Balance Sheet tab. Find a section for long-term assets and insert a new row below the existing long-term assets. In the appropriate cell, type equals, then navigate back to the Chart of Accounts tab and select the exact name of the new account. Drag and drop the formula from the cell above to apply the same calculation logic. Unhide the columns JK and L and drag and drop the formula in the J and L columns. Hide back the columns J to L. If needed, pause and rewind the video to make sure you complete each step correctly. It's important that all the right formulas are in place so your calculations run smoothly. Finally, verify that the new account is included in the total long-term assets calculation. If it isn't, make sure to update the formula in the total long-term assets cell to include it. Step 3. Testing the setup. It's always a good idea to run a quick test to confirm everything is working correctly and that your entries are balanced. In the Transactions tab, add a dated test transaction. Use the company's bank account and the new building account to record an asset purchase of $100,000. Check the balance validator at the bottom. It should display $0 in green, confirming the transaction is balanced. Go to the Trial Balance tab, refresh the pivot table, and return to the Balance Sheet tab to verify that the $100,000 asset appears correctly as a long-term asset. Always confirm that the balance check displays $0 in green before moving on. You've now learned how to properly add both profit and loss and balance sheet accounts to your chart of accounts. Link them to the correct financial statements and test your setup to ensure everything is working smoothly. This process helps maintain the integrity of your financial data and ensures your reports reflect all relevant activity. Whether you're adding a new expense or a major asset, following these steps will keep your accounting system clean, accurate, and ready for analysis. If this walkthrough helped clarify things, feel free to subscribe, drop a comment, or share it with fellow entrepreneurs who could use a hand with their tax filings. Thanks for watching, and I'll see you in the next chapter of your business journey.